Nitin Raheja also joining us this afternoon. Nitin, a nice booster really by the RBI. What are you making? Do you feel this is going to have the desired effect now on easing liquidity pressure with regards to NBFCs?
I mean, clearly, yes. I mean, this monetary policy has been a big surprise from, from an interest rate perspective. I think it was expected given the inflation that there will be no further cut. But the entire stance of the policy focusing on the fact that there is a clear slowdown and there needs to be an accommodative stance at this present moment. And, more importantly, I think one of the big disappointments in the budget was that there was nothing really concrete from a real estate perspective. To that extent, by at least for the commercial real estate that they have just announced, it really helps the NBFCs. It eases the pressures on the real estate sector. Ideally, I would have loved it if they had come up with a similar dispensation for residential also, because that has been a long-standing demand of the NBFC sector. But I think from that perspective, it's good. And also, of course, they brought in the MSME into the ambit of providing, not having to provide for bad loans and giving an extension to restructure for another year, which is, I think, all very good.
All right, so all positive. You're right. Just what was lacking in the budget has now come out from the RBI, clearly saying don't discount what impact we can have there. So then, from some of the smaller, NBFCs, Nitin, which are some of the ones that may be looking more attractive currently, or even from the banks?
Look. While this will help some of these, all the NBFCs, including the smaller ones, from having to, to classify this thing. But I think the important thing is we are yet in an environment which is risk averse. We are yet in an environment where the larger NBFCs will actually have the ability to raise more capital and attract capital to grow. And this kind of adds on a further benefit to them. So I think the kind of people who would probably benefit within the NBFC space, of course, the largest of them is Piramal. You also have Edelweiss, you have IIFL. All of these NBFCs, in my view, would probably, HDFC, of course, will benefit. But I think these are the NBFCs which will actually benefit the maximum.
All right, fair enough. Nitin, give us a sense as to what you made of Eicher Motors' quarterly performance. It's been an inline set of numbers, although margins have contracted a tad this quarter. What is it that you would expect to hear?
No, I think the key element which everybody is looking for is when is volume going to start, showing up and coming back. For all these companies, and in Eicher Motors especially, they've had very handsome margins compared to all the industry peers, primarily because of their positioning at the higher end. That higher end is getting more and more populated. There's a lot more of competition entering into that, and hence they have tried and diversified their product mix. They've tried to diversify the geography mix, and so on and so forth. We haven't seen initial signs yet of that strategy having contributed in terms of volume. But I think the key headline number for all these stocks to be re-rated is ultimately going to be volume numbers.
Just wanted to highlight, about the Emami Group. Important flashes at the bottom of your screen. They have entered into a binding agreement with Nuvoco Vistas for sale of their cement business. I think the enterprise value is pegged close to around 4,000-5,000 odd crores. So we'll wait and watch for more details. But it was a development which was expected. It was a development which the street was awaiting. So, that's something which I'd like to highlight. Emami, of course, it's the Emami Group. I don't think Emami owns this, 2.8% higher. But again, consolidation in this sector continues, Avan.
Yeah, and actually, Pankaj, this is the second time that Nuvoco, which was formerly Nirma Cement, actually has, tried to create an upset for some of the other bigger players that acquired Lafarge Holcim's India assets for close to $1.4 billion. This was in 2016. And now they have a capacity of about 11 million tons. They're trying to consolidate that position. And do remember, currently it's dominated by 40% by the two biggest players, which are Ultratech and Ambuja. So this is another step in that endeavor to really up their overall presence in the East, to consolidate their position and to become a bigger player. This is for Nuvoco. This is for Emami's overall a cement business owned, as you said, by the Emami Group. It was close to 5,500 crores to 6,000 crore rupees is what the street was talking about in terms of the valuations. Well, getting a move on then, Nitin, I just wanted to get in your take on what's happening within the media space. The continuous reports that we get about how digital is just the second largest advertising medium in India after television, and it's estimated to grow at a very healthy clip of nearly 30%, while the traditional advertising mediums like TV, radio, outdoor, etc. is supposed to be in mild single digits. With OTT players upping their, offerings, etc. How are you looking at growth within the media space?
So I think when you look at the entire media space, clearly I think you kind of encapsulated the entire fact that, and it's visible in the way you, I, and everybody is accessing media today. So that the fact that digital advertising is growing at that pace is not a very surprising phenomena. I think it's just that before you know and you realize how big it has become as a part of the pie is there. So clearly I think within the media space, however, traditional business models have been under stress. So hence you are seeing you are seeing the newspaper, the traditional newspaper companies are facing a lot of stress as far as their business is concerned and hence the valuations are also manifesting that. Within the media space, again, broadcasting is yet continuing to do well but however, you've seen corporate governance issues being plagued at the larger players. However, if you look at it a little more broadly at the entertainment level, we do see an opportunity from an investment perspective in the multiplex space. I think that's a space where we are seeing growth yet continuing to happen. You are seeing, despite the current demand constraint, people yet moving out and going for movies, and hence you're seeing box office numbers every quarter really being robust. So that's an area where we particularly find that corporate governance standards being there, and you are playing the entire consumer story out there.
The consumption story is probably the one that gets re-read every time. Is that, time and again proven? Whenever people get any positive news, it's the consumption stocks that go up.
Well, with almost 65% of your GDP comprising of consumption, and the fact that if you really look at it, one of the biggest concerns this time around has been the demand slowdown. Something which I don't recollect in my 25-30 years of being in capital markets. We've always had supply-led issues. We've had high interest rates. We've had balance sheet-led concerns. But for, consumer demand slowing down, which is largely due to high unemployment and incomes not going up at the levels that they should be, is clearly a concern. So whenever you are seeing a bounce back, whenever you are seeing the economy come back, hence you are seeing people moving, is just because the size of the market and the opportunity is so large. So people are playing out. Very often people are actually discounting years of consumption into present prices, but that's a theme which has worked well and will well work, because you're at 65% of your GDP.
Thanks so much for joining us this afternoon and taking us through, the RBI policy and other pockets of the market that are looking interesting right now.